Hey investor friends, I'm Michellemarki, and could Alibaba be actually staging a comeback, and has its stock price finally bottomed? I ask these questions because Alibaba's stock seemed to have been left for dead toward the end of October after China's President Xi Jinping locked in a third term, and that spooked the markets, causing a bunch of Chinese stocks to drop massively, including Alibaba's, so much so that it had reached a recent low of $58 per ADR share, and then it recovered into the $60 and $70 per share range until closing at the time I'm recording this on Friday, November 18, at around $80.50 per share. So basically, it's trading back to where it was at the beginning of October. And so I'll reflect today on Alibaba's current financial performance at the quarter ending September 2022. And I think that it's actually getting better for Alibaba, and that's probably why its stock price has jumped back into the $80 per share range. And so if you also enjoy learning about Alibaba, I hope you'll like and subscribe to my video and YouTube channel, because I love studying stocks and really great investors and Charlie Munger and Warren Buffett. And I hope that by following some of the stocks that they're invested in, that maybe it might be also within our circle of competence, and maybe we might consider investing in some of them too. So I hope you enjoy what I'm talking about today. Let me start by telling you how Alibaba did in two financial metrics compared to analyst expectations, which include how they beat on profit by delivering $1.85 per share compared to analyst expectations of $1.66 per share. And then with revenues, even though they increased by 3% year over year, this actually did not meet analyst expectations, where they delivered only $29.12 billion of revenues compared to $29.44 billion of revenues, and they only missed slightly by $32 million. So I don't think that that was such a huge miss, and I don't necessarily put that much credit on analyst expectations. I mean, they're sort of just a high-level guide as to how a company is supposedly maybe going to perform in a given quarter. But if you're a Buffett-style investor like I am, you don't really try to grade a company based on how they're only doing on a quarter-by-quarter basis, but over a long term, how a company is generally trending and doing. So I don't put that much weight on analyst stuff. And so I'd actually like to give you a little summary of what the CEO, Daniel Zhang, said, where he said that they delivered a solid quarter in a macro environment full of uncertainty. And along with ongoing resurgence of COVID-19, geopolitical tension, inflation, and currency depreciation, that made for a lot of difficulties in their business operations. And despite those challenges, Alibaba's non-GAAP EBITDA increased by 29% year over year as they continue to enhance their operational efficiencies. And they said that this demonstrated the resilience of the Alibaba ecosystem, where their cost reductions and efficiency improvement measures are finally beginning to bear fruit. So based on that, the CEO of Alibaba seemed to be somewhat optimistic about how Alibaba performed. And like I mentioned earlier about the types of ways that we analyze companies, if you're a similar Buffett-style investor, we don't necessarily put as much weight on EBITDA, but because this is actually a differing figure than how it's been for some of the several latest quarters for Alibaba, I'm going to give some credit to how Alibaba actually has a positive 29% in their adjusted EBITDA, because they had actually been poorly performing in this area over the last 5 quarters, where their adjusted EBITDA was actually really negative since June 2021 through June 2022. So the last time that Alibaba had a positive year-over-year adjusted EBITDA was back in the quarter ending March 2021. So it's kind of no wonder that Alibaba has been declining significantly over that period of time. But maybe now they're finally starting to see the light at the end of the tunnel and digging themselves out of a negative operational performance level. Although ongoing COVID-related restrictions continue to hamper the Chinese economy and they resulted in abnormal or suspended logistical services, Alibaba seemed to do pretty okay despite some of those challenges where there was logistical disruptions of about 15% of the delivery areas starting in October through the November 11 Singles Day shopping festival. And in spite of that hurting merchant operations and the consumer logistical experience, they said that sales were still in line with what they were last year, and they didn't share the total gross merchandise value this year. But if it's close to what it was last year, it would be at around $84.5 billion. So generally, it seems that the Chinese are starting to maybe just cope better with how COVID has largely restricted a lot of activity in their lives. And they're still buying in spite of kind of a depressed economy with how there was the real estate and housing bust. So in spite of all that, Alibaba seemed to be trucking along all right. And some of the financial activity that's especially important to me is how Alibaba is doing across their share repurchases or share buybacks and also their free cash flows and net cash position. And so across some of these factors, Alibaba had done $18 billion out of the $25 billion that they had set aside for share repurchases so far as of November 16. And so there's technically $7 billion worth of buybacks to go. But then they also said that their board approved for another $15 billion worth of share buybacks. So in total, that would be $40 billion of share buybacks that we can expect Alibaba to complete at some point in the future. And in this quarter, they did about $2 billion of stock buybacks in the quarter ending September 2022. And then their free cash flow was also better compared to this quarter last year, that it also improved by about $1.9 billion. And then also their net cash position, I had never seen it say restricted cash and escrow receivables before, but apparently that's a new thing, and it's now at about $45.5 billion of net cash, which is down about $5.3 billion from where it was in the quarter ending June 2022. So all in all, they still have plenty of cash to be able to afford their share buybacks in the future and currently. And so it's pretty good that Alibaba has improving free cash flows. And even though their net cash is down a little bit, it's still in pretty good shape. And an area that I especially like to keep tabs on is how the Alibaba cloud is faring. And after several years of rapid revenue growth, it seems to have slowed down to a crawl lately, but at least the Alibaba cloud seems to finally be profitable as of 2021. So that's a bright spot. And to illustrate how much the revenue growth seems to have declined by, back in the September 2019 quarter, it had grown year over year by 64%, and it declined only slightly to 61% in September 2020. But then it got cut in half by about 33% growth in September 2021. And then now in September 22, it's only at 4% growth year over year. But at least adjusted EBITDA is finally not in negative growth rates, and it went to as high as 170% growth rate in September 2021, and then a 9.6% growth rate in September 2022. And I'd like to compare how Alibaba Cloud is doing to Amazon Web Services, where it's stark in contrast, where AWS had a revenue growth rate or net sales of 27.5%. So compared to Alibaba Cloud's 4%, AWS seems to have done way better. And then also, even though this might not be apples to apples comparison, Amazon Web Services had a 10.6% operating income increase, and that's about a 1% amount better compared to Alibaba's 9.6% adjusted EBITDA increase in September 2022. So based on all of this, it's somewhat concerning that Alibaba's revenues are declining so fast, and they largely blame it on one top internet customer that gradually stopped using their overseas cloud services for its international business. And this might be ByteDance's TikTok maybe, and it seemed to be causing an 18% decline in the cloud revenues compared to the non-internet sector that contributed 28% of Alibaba's growth in the cloud revenues. So overall, it seems like Alibaba was suffering from some of its internet customers declining and using some of its cloud business, like maybe in addition to ByteDance, maybe also some online education providers also cut back on using Alibaba cloud services. But overall, it's a good sign that Alibaba is profitable still in cloud. And in listening to this quarter's webcast, I picked up an interesting hint from Daniel Zhang of maybe suggesting where Alibaba's stock price should really be, because he said that during the 8 years since Alibaba's IPO in September 2014, that the business quality and scale have improved significantly, where the revenues are 12 times what it was this time in 2014, and also their adjusted EBITDA is 4.5 times of what it was in 2014, and their free cash flow is 4 times what it was in 2014. So based on that, you could maybe estimate that Alibaba's stock price should really be somewhere north of $300 per share. If you multiply something like 4.5 by $68, the IPO price, or even $80 per share where it is today, and then you'll easily end up in at least $300 to $360 per share of what maybe Alibaba's stock price should really reflect based on this progress over the last 8 years. And interestingly, that's kind of where it had peaked back in October 2020, before the infamous Jack Ma speech kind of torpedoed Alibaba's stock price. So based on all of that, it seems like maybe that's where Daniel hopes that Alibaba's stock price can recover to eventually. And he also mentioned that China's GDP had almost doubled from 59 trillion renminbi in 2013 to 114 trillion renminbi in 2021. So based on this progress alone, Alibaba should be reflecting a much better stock price than maybe Wall Street is giving it credit for currently. But we'll just have to see if they're able to improve and show that they can continue generating a lot of positive free cash flow. And maybe as long as China and the US resolve some of the outstanding issues, like we'll get an update in December about which Chinese companies could potentially be delisted. So I'm sure that Daniel and others in Alibaba are hoping that Alibaba won't get delisted, and maybe things will be on the up and up from here on out, but we'll just have to see what happens. And so if you enjoyed this video or learned something, please like and subscribe, and let me know in the comments what you think about how Alibaba is doing. I'd love to hear from you. Till next time.